Wednesday's market closes mostly lower except for the wheat market. Joining us, Tommy Gersafi with Advanced Trading. Tommy, market was kind of anticipating the Fed announcement on Wednesday, and we got 0.75%. You know, the market kind of absorbed that well because we were already anticipating it, right?
Correct. And the market very much anticipated 0.75%. The real shocker, Michelle, would have been a 1% rise. They didn't. Now they're going to start speaking here, and they'll tell you, they'll add little things that could move the markets later. But I really feel like the stock market so wants to have a recovery rally. We'll see if it can do it here by the end of the day. Now moving forward, there's so many other things to digest. When it comes to wheat in particular, comments overnight out of Russia, very aggressive comments, nuclear rhetoric. China got involved and said, let's all come to the table and meet. Big volatility overnight, and that looks like to be the theme here. Because as the Russia-Ukraine conflict or war started, some people thought it would last a few days, a few weeks, a few months. We're going on 6 months, and no end in sight. President Putin last night requested that 300,000 Russians would be asked to serve and fight in the war. That's a scary number, and this doesn't, I don't even think we can call it a conflict, call it a full-blown war, and that's very much affecting wheat.
So we've taken so much weather premium, not weather, but war premium, I should say, out of these markets. How much do we need to put back in?
It's very interesting because wheat had such a vicious sell-off. Of course, we remember the vicious rally that really hurt some people financially who were in a bad spot, and it hurt some aggressive hedgers. And then we went to what many would say is oversold as we hit harvest lows seasonally, and then we had our spring wheat harvest up here in North Dakota. So all that's behind us. What wheat is grown in the United States, and farmers have staying power, and they should be able to hold on to that. Of course, we don't have great wheat demand, but people like to get in these futures and options. They also get into the stock version of wheat, as many people are starting to trade that, and that's really having an effect on the wheat market. So to your point, we've added quite a bit of premium back to that. That $10 level should clean a lot of things up.
So corn and soybeans, we had kind of a gift rally, I would say, yesterday following the wheat market up and then set back here today. But we also kind of ran up into some chart resistance areas and probably an area where we maybe got a little hedge pressure, do you think?
Yeah, we did. And when we ran up again was in the middle of the night, 1, 2, 3 in the morning, not quite, hedge fund managers aren't getting up typically at that point to do massive buy orders. Of course, it came off of news or rumors or rhetoric out of Russia. And we didn't quite pierce $7. If D's corn would have closed above $7, would have been all the talk, all the headlines. But we backed off, which is a kind of a healthy thing to do. Of course, wheat dragged up corn and beans yesterday, and corn and beans went back to doing what they should be doing this time of year, having a little harvest pressure, finding some sellers. And technically, if you're a chartist, you'd say, yeah, it went right up to that good resistance and we sold back off. But I can't complain about prices. I can't say the world's ending. We went up yesterday, and corn and beans, we gave up the same amount today. Wheat's been all the talk, and wheat is the hero of the day.
So if wheat goes back higher, if we continue to see the tensions escalate and wheat keeps going up, will corn and soybeans have to follow even though we're in harvest or not?
They don't have to, and I guess it depends who's driving the bus. If it's hedge fund managers, they're like, if wheat's going up, buy corn, buy beans, buy everything. But the farmer, the natural seller in America, will have the most corn and soybeans we're going to have on hand in the next 6 weeks. So just think of that. Over the next 6 weeks, that'll be the most grain in storage till next year, and we'll start eating away at that. And our supplies, as you know, the number is so fragile in the beans as we talk about a possible 50 yield, almost a zero carryout, to be honest with you. Corn number, talking, a couple problems around the world and some other things here, a little lower yield here in America, we could have under 1 billion carryout, which, as you know, would only last us 20 some days. So a lot of things to watch in corn and beans. And as you asked about the wheat, are they following wheat? They can, but this time of year, they should start to do their own thing.
So do you sell or store here? Because basis levels are likely to be pretty tight here at harvest because of these tight supplies, right?
Yeah, great question. I asked a few clients today what they're planning on doing. The rally that we had all last winter during the Ukraine war, during different weather events, but pretty much the war, that got people forward enough sold. I have very few clients who didn't get what they couldn't store sold during that price rally. Now, of course, we'll talk with corn first. People will sell what they have contracts for, and I think they're going to take a shot at storing it and look for that basis appreciation. It doesn't have to happen, but it likely might. Now, when it comes to beans, as you know, an incredible amount of beans flow to town during this time of year. And when people do that, when they sell beans off the combine, we like to replace that with a call or call spread and keep that upside. Stocks, Michelle, are way too low to think that we can't go higher.
So one last question about the cattle market. We've been so resilient here, even with recessionary sell-off in outside markets and whatnot, even a higher dollar. So what do you think going forward here? We've gone up into these contract high areas, and then today it looked like maybe some profit taking, but do we take another run at this?
I mean, cattle market, you think at some point would watch the outside markets, and if those got loose and really had a bad sell-off in Wall Street, maybe that would affect it. But the numbers are tight, and this all stems from last year when we had the drought in Canada and North Dakota, right, and all the plains, Montana, and then now the drought switched. So overall, I just feel like the numbers are down. I just think feeders are going to have a 200 in front of them here in the next 3 months. We'll see if it happens. There's no money back guarantees here, but looking at that board, boy, has it been resilient, even with these higher grain prices.
All right. Thanks so much for joining us, Tommy Grisafi with Advanced Trading.